Hello everyone, this is Alexander Nikolov from trendrecognition.com. Today I'm going to discuss with you the medium-term to long-term prospects before the US stock market. As you know, there was a severe decline in late July, early August in the US stock market, followed by some kind of a recovery in mid-August, but last week the decline resumed and we actually retested the August 9th lows on Friday. Today, however, I'm not going to discuss the short-term prospects. As you know, I discuss them, the short-term and the daily prospects of S&P 500 and Nasdaq 100 in my daily and weekly updates on my website. But today we are going to take a look at some indicators and some scenarios considering the larger picture. So I'm going to briefly take a look at the trend in volatility, the SPY TLT ratio, some other indicators, and then I'll discuss with you the most likely scenarios for the medium and long-term trend in S&P 500. So let's start with the volatility. As you know, the volatility skyrocketed in early August. And actually the VIX index reached the levels last seen last May, in May 2010, after the so-called flash crash. Going back then, you remember that the market then spent the next 3 to 4 months in sideways consolidation and resumed its long-term uptrend in September of 2010. So the best case scenario that the bulls can hope for right now is for a sideways market of at least 3 to 4, 5 months, followed by another rally. So with this huge increase in volatility, it will take time before the market can rally again. So the best case scenario here is that we'll see a sideways market followed by some kind of a rally toward the end of the year or early next year. But the other view, of course, is that the volatility has established a new uptrend, and that's highly likely considering the fact that the VIX index is higher again after the market decline on last Thursday and Friday. VIX is now at 43 levels, so maybe we have entered a period of market period of higher volatility. One indicator that I follow regularly in my updates is the SPY TLT ratio. This is the ratio that shows preference of investors of stocks over bonds. And right now this ratio is in a clear downtrend. Actually, it broke down 3 weeks ago, and now it's below the 20-week and 50-week moving average, and that's a clear indication of a downtrend. That means investors prefer bonds over equities. And since this ratio, this is a weekly chart, it shows trends that last for at least several months. This trend is not likely to reverse overnight. So it tells me that this situation is likely to continue for the months to come. Some other indicators, though there is some panic on the market seen on the VIX index and some other put-call ratios and some other indicators, the general sentiment is still bullish, with more bulls and bears on investor sentiment surveys, so that's not a good sign. And I have taken a look at the market industries, and actually almost all of the market industries and sectors are below their respective 200-day moving averages, and only with a few exceptions here: gold stocks, utilities, maybe you can find some others, but overall this is not a healthy situation for the broader market as well. And the same picture you can see on the international markets. If you look at the international markets ETFs, most of them are again below their respective 200-day moving average. And again, there are a few exceptions here: Malaysia, Thailand, but overall these are signs that this market is not healthy. Lots of industries and lots of international markets are already in confirmed bear markets. What are the most likely scenarios for the next several months for S&P 500? Scenario number one is a rather positive one, but even this scenario suggests a sideways consolidation in the next few months, as discussed earlier when I discussed the VIX chart. So that's probably the best the boost can hope for. This is a sideways market between, let's say, roughly 1100 and 1200 in S&P 500, followed by another bull market in 2012. This is still a possibility as long as the market holds above the 1000 level. So this is still possible, but I consider it less likely to occur. The most likely scenario, scenario number two, is a further decline after some consolidation and some choppy action. We can expect lower prices going forward. How lower? My guess is 900 to 950 area within the next 12 months or so, and then probably another sideways consolidation with initial strong upside bias. So overall, I do not expect a huge decline from here, similar to the one that we saw in 2008. I do not expect a vertical move down. More or less, I expect a choppy action, but with downside bias. And if that's the case, most likely sometime in 2012, some of the markets will diverge and will start to trend higher. But that's the prediction for the US stock market. And this second scenario fits quite well in my long-term view of the S&P 500. My long-term readers know that I've been looking for a long time for a contracting triangle since 2000 top, the top that was achieved in but in the summer of 2000. And if that's the case, we have just entered the last phase down of this contracting triangle. But again, most likely we will see several years of sideways consolidation once the current decline is over. And I do not expect a huge bull market similar to the one from 1982 to 2000 and from 1949 to 1966. I do not expect such huge bull market to start before 2018. So in conclusion, right now there is a clear sign that S&P 500 is in short to medium term bear market that is likely to last about a year or so. And the most likely scenario is that we are not going to witness a severe decline. More of a kind of a sideways consolidation with downside bias. The risk-averse assets, TLT, which are U.S. Treasury bonds, Japanese yen, are all in uptrends, which is another confirmation that the medium-term trend is down for the stocks. And again, I want to stress this, that most of the market sectors and most of the international markets are in confirmed bear trends. So the market is actually internally weak. All in all, I expect the market to trade lower in the coming months. Sideways consolidation with downside bias, and only a firm move above, let's say, 1280, 1290 in S&P 500 will be a signal that scenario number one that we've just witnessed is in place, and in this case, of course, we will be bullish. But until that happens, the path of least resistance is down. I hope that's useful for you. I'll be talking to you again later this month.